Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Very good morning to you, young Tim.
Good morning.
Right, it's been Merger Monday for the last 2 Mondays, 3 Mondays. Some people may say a little bit longer. Everything this week seems to be trade wars, etc., etc.
Well, there is a few mergers and acquisitions that are reaching an end point. Obviously, over the weekend you saw the GKN Melrose situation intensify, with Elliott suggesting that they are willing to back Melrose. Furthermore, you've seen another rejection of a bid this morning from Smurfit Kappa from International Paper. A slightly higher bid, but Smurfit Kappa immediately came back and said it still undervalues the business. But in a market as tetchy as this, you've got to be pretty confident if you're an acquirer that the target is well worth going for. As you rightly point out, at the moment it would appear that trade wars are on the tip of everyone's tongue. So where the market goes from here is almost anyone's guess. Okay,
so the technicians were coming on saying a close on the June future below sort of 7,000, really quite bearish. Are you, in these situations, looking at the technicals, or are you just basically sticking to the fundamentals?
I mean, at the moment, you've just kind of got to roll with the punches because the markets are incredibly volatile. Had you asked me that question on Tuesday last week, the market actually looked quite sensible. Fast forward 48 hours, Thursday, Friday, it suddenly looks pretty horrific. The FTSE breaking through the 7,000 level down into the 6,900s. It's a significant pullback if you take off the peaks at the start of the year where we were near 7,800. It is a significant decline. That being said, if you are looking at the granular data of companies and looking at the long-term growth prospects, there is a massive amount of value opportunity out there. For us, we are just sat on our hands. We are waiting to see momentum and sentiment improve before we start before we start buying into positions, as opposed to trying to catch a falling knife. It may work for some, but for us, with the risk against us, it's not really worth the trade.
And finally, any companies you're particularly interested in terms of reporting this week?
I mean, to be quite frank with you, at the moment, companies reporting are almost a non-event when you take into account the geopolitical situation. I would suggest you've got GDP figures from the UK and the US this week, which will be interesting to see. Further clarity, I suppose, as to whether or not we are going to see the continued rate rising situation in the US, whether or not Carney and Co. look to raise rates raise rates in May of this year. But in terms of companies reporting, we've got two to look out for, both US, Red Hat and the old favourite BlackBerry.
Understood. On that note, Tim, thank you very much indeed.